If you're keen to know what's going to shape our property markets in 2018, that's exactly what I'm going to show you today as we discuss 8 trends that are going to affect property in 2018. And I'm also going to teach you one of the laws of money and success, the important law of accumulation.
Are you interested in property investing, success or money? Well, you're in the right place. This is the Michael Yardney podcast, where each week you'll learn a number of new ideas regarding success, property investment and money in 20 minutes or less. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, who has once again been voted Australia's leading property investment advisor. That's the 4th time he's won a similar award in the last 6 years.
Welcome to this week's show, particularly to all the news listeners. And I can see on our statistics that every week, tons and tons, hundreds of new people are listening and subscribing to the show. Thank you. And particularly to the returning listeners for supporting me and making us one of the highest ranking business podcasts on iTunes. This week, I'm going to discuss the important concept of what's going to be affecting our property markets over this year so that you've got some ideas of what's ahead. And while I can't predict exactly what's ahead, these trends are going to shape the future of property ahead of us. I'm also going to discuss one of the laws of money and success. Yes, there are laws, and if you understand them, you're more likely to be successful financially. So in my mindset moment, I'm going to discuss the law of accumulation. And before we get on with the main content of the show, if you're wondering what's happening in the property markets in your home state or what's ahead, I just want to remind you that only once a year now, I travel to Melbourne, Sydney, Perth and Brisbane to do my national property market updates with a number of leading experts. And while this normally costs $99, I've got a special deal for subscribers to my podcast, a way of saying thank you to you that you can join us for free. So if you go to propertymarketupdate.com.au and put in the promotion code podcast, you can book your own tickets and bring a friend for free, and you'll still get all the bonuses. So why not catch up with me live? I'd love to see you. I'd love to help you understand what's ahead, and that's why I'm bringing some great experts along with me just once a year. You can find out all about it at propertymarketupdate.com.au. Use the coupon code podcast and you can be my guest. Okay, let's get on with the show and understand a bit about what trends are ahead for 2018. Now that we're well into 2018, people are asking me, what's going to happen to property prices? What's ahead for our market? And that's what we're going to have a bit of a chat about now, but not exactly prices, but more the influences and the trends for 2018, because our property markets don't act in isolation. And if you think about it, after 5 years of soaring property prices, the forecasts for this year are going to be mixed. Property values are going to finish the year higher, I believe, but not as strong growth as we had last year. If you look back, the growth of 2017 confounded most property commentators, was much higher than they predicted. However, now we've got signs that we've moved to the next phase of the property cycle. House price growth has stabilised, auction clearance rates have dropped, lending to investors has slowed, and consumer confidence, the confidence in what's happening to our markets has dropped a bit too. So I can see slower growth this year, and I'm going to now go through 8 trends that I think will shape our property markets this year. So the first one, I guess I've already said, that the phenomenal growth of Sydney and Melbourne in particular over the last 5 years has come to an end. But what's going to exactly happen to property values is going to depend upon what the Reserve Bank does to interest rates and what APRA does to our lending criteria. So having said that, my second prediction is going to be that interest rates are going to remain the same for the year. The official interest rate is likely to remain at around 1.5% throughout this year because Australia's economy is still operating below its potential, and economic growth isn't strong enough to justify an interest rate rise yet. Because that's the only reason the Reserve Bank is going to raise rates, to slow down either our economy or our property markets. Sure, there are positive signs. Jobs are being created, unemployment's falling a bit, full-time employment's going up. But this is being offset by slow wages growth, by sluggish retail sales, and by a benign inflationary environment. So in some ways, the Reserve Bank would like to lower interest rates to push up our economy, but it can't afford to do that because it doesn't want to fuel the property markets. On the other hand, the Reserve Bank is going to be pleased that our property markets are cooling, and so it won't feel the need to raise rates either. The third trend for this year is that APRA is unlikely to tighten its macro-prudential measures any further. It's getting its way. Under its watch, bank lending criteria have created what I've been calling a credit squeeze, and that's stifled the Sydney, in particular the Melbourne property booms. But this time round, the slowdown has occurred in a lower interest rate environment. And this means that banks are in a healthy condition and loan defaults are low, and businesses are able to borrow cheaply to be able to keep building their inventory, to buy equipment and to hire people. This means APRA is really unlikely to tighten the screws any further this year, but on the other hand, it's still a bit too early for APRA to relax its guidelines. A fourth trend that's going to affect our economy and our property markets this year, in my mind, is going to be continual jobs growth. Last year, more than 335 jobs were created, and the good news is the majority of them are full-time jobs, and Australia's golden run of jobs growth is likely to continue to underpin our economic growth. And at the same time, our population is going to keep growing. So that's the fifth trend. Our strong population is going to continue to underpin our property markets. Last year, the population grew significantly, and that created a demand for about 164,000 dwellings. That's been the rate over the last 5 years, really, according to the Australian Bureau of Statistics, and likely to continue on. And that's because not only population growth, but if you think about it, it's actually more related to household formation, how many households there are. And we're at a period of strong household growth. More than population in some ways, because if you think about it, there's more single people, single young people moving out of home and getting married later, people having babies later, there's more older people living on their own, living longer. And a lot of the migrants, the immigrants coming to Australia, are coming at household formation age. So it's all these new households being formed that is creating an underlying demand for our property markets, and that's good. Looking at the statistics for last year, Victoria was the fastest growing state with a population increase of 2.4%, and this soaked up much of the anticipated oversupply of new apartments in Melbourne. The statistics from Australian Bureau of Statistics suggest that overseas migration accounted for 60% of Australia's total population growth, and we added about 231,900 permanent people to the population. And if you take into account the temporary visitors, the students, it's actually much, much more. It was close to 400,000 people last year. But when you look at permanent population, overseas migration was a major contributor in New South Wales, Victoria, South Australia and Tasmania, and in the other states, natural increase was the major contributor to population growth. We're going to take a short break, and I'm going to deliver you my weekly mentorship moment, and then we're going to come back with 3 more important trends that are going to affect our property markets in 2018.
If you're looking to get started in property or to grow your existing portfolio, turn to someone you can trust for independent advice. The team at Metropole Property Strategists have been involved in over $2 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy, their buyer's agents will buy your property for you, or you could use their renovations team, property development or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au. Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
As you know, each week I like to share a mindset moment with you, because you're not going to be able to drive a Lamborghini with the engine of a Hyundai. So you're going to have to upgrade your engine. You're going to have to improve your personal development. And one of the ways you are going to do that is by understanding the laws of money and success. And today I want to teach you a bit about the law of accumulation, which says that everything great and worthwhile in life comes about as an accumulation of hundreds, if not thousands, of tiny efforts or sacrifices. This means that everything that you do, or everything you fail to do, will impact on your final results. Look, it's an unusual concept to wrap your head around, but once you understand it, you can start to fully appreciate how it can impact your accomplishments in business, in life, in money as an investor. You see, I've found that success rarely occurs overnight, nor does it come as a result of one single experience or one breakthrough. Instead, lasting, genuine success gathers and accumulates over time. That's the power of the law of accumulation. It allows you to appreciate that once you set yourself upon a goal, everything you do either helps you or hurts you from reaching that goal. Now, let me explain it a bit better. Are you having difficulty saving a deposit for your first home, or maybe for your next investment property? Well, let me ask you a question. What did you have for lunch today? Now, before you think, oh, what's Michael on today? What did you have for lunch today? Did you make something yourself, a simple sandwich, maybe some reheated leftovers? Or did you go out downstairs and buy a coffee and buy a muffin and spend more money? See, if you've already set yourself a goal to grow your wealth through property investing, it stands to reason that every dollar you save, your day-to-day normal expenses, you could actually put it towards achieving your real estate goals. So if you did delay gratification, and if you didn't go off and spend the money on those feed drinks or the coffee downstairs when you've got some in the office, or if you brought your lunch, that would get you over time much closer to your saving goal. But that's a simple use of the law of accumulation. There's a lot more power to it than that. So while creating wealth through property investment isn't going to happen overnight, as I said, you can use the law of accumulation to your financial success in 3 other areas, not just money. First of all, knowledge. Let's face it, knowledge is power. So the key factor that gives you the leverage to recognise or act upon potential fruitful opportunities is going to be your body of knowledge that you've accrued over the result of thousands of, getting small pieces of knowledge that's accumulated over time. It doesn't happen out of thin air. It's going to take time for you to read the blogs, listen to the podcasts, go to the seminars, and fill up your mental library one item at a time. So over time, this cumulative result of those years of study and growth are going to make you an expert, and that's going to set you apart from the average investor. So one area where you're going to use the law of accumulation is accumulating knowledge. The other area I want you to consider using the law of accumulation in is getting experience. Remember, successful people in any field are invariably more experienced than those who aren't successful. In essence, the more experienced you are, the quicker you're going to connect the dots next time you've got to make a decision. Because you've got a greater depth, you've got perspective, you've got experience to draw from. And the only way to truly acquire experience is by willing to take risks. And sometimes there's no guarantee of success. The greatest enemy of mastery and experience is living within your comfort zone. You're going to have to learn to become comfortable with being uncomfortable, allowing the anxiety that comes with the thought of trying something new and different may just hold you back a little bit. This means that unless you move out of your comfort zone and take chances, you won't accumulate those new experiences. You're going to need to stretch, you're going to need to grow. I've heard it said, you can only learn to succeed by failing. So the second way you're going to use the law of accumulation is in getting experience. And the third way is through money. Look, in almost every circumstance, large fortunes come about as an accumulation of many smaller amounts of money. This is particularly true for property investors who use the magic of leverage, time, compounding to grow their assets. It's a concept I discuss almost every week in this podcast, isn't it? You've probably heard it said it takes money to make money. So if you're starting your journey, the trick is to spend less than you earn, save the difference and invest. Gee, now that concept's come up a few times in this podcast too, hasn't it? But as your savings grow, you're going to develop momentum. You're going to be able to get closer to your financial goals. Now, sure, it's hard to get started, and sure, these small amounts that you're going to save won't seem like they're much. But with using the law of accumulation, by beginning saving say 10% of your income and then increasing it to more, you're going to successfully get the force of the energy that the law of accumulation gives you to attract more money, more wealth, and help you along your property investment journey. So there you have it. Isn't it time you use the law of accumulation to help you develop financial freedom, whether it's through property investment or just in general in your life?
If you're enjoying our show, please subscribe on iTunes. You'll find us there as Michael Yardney Podcast, and we'd really appreciate it if you would leave us a review. When you do, we'll read it out on the show. By the way, Michael creates a lot of content he only sends out by email, which you can have with no obligation. So also visit michaelyardneypodcast.com and subscribe to his commentary there.
Okay, let's continue on with the 8 trends that are going to affect our property markets in 2018. I've already spoken about lower price growth, about the Reserve Bank and APRA not changing their restrictions at the moment, about population growth and jobs growth. So if we assume that APRA and the Reserve Bank are not going to change their criteria, here's what I think is going to happen to our property markets. Let's start with Sydney, our biggest property market, which, look, we all know it's run out of steam, but I can't see it crashing like some people are suggesting. Instead, I see lower, slower growth, probably between 4 and maybe even up to 6% in some areas. Now, I know it's more than some people are predicting, but I believe there's still underlying demand for A-grade homes and investment-grade properties, more demand than there is supply. So I see slower growth, but still growth in Sydney. I believe Melbourne's going to be the best performing market in 2018, with houses, townhouses and villa units likely to be the best performing types of property, better than apartments, and growing between maybe 6 and even up to 10% over the year in some suburbs. Brisbane's going to get its turn in the sun. Its market's going to move up a notch, spurred by jobs growth and infrastructure growth. And well-located houses are likely to grow between around 3 and 6% over 2018. I think Hobart's going to perform really well again. It could well be the best performing market in 2018, but I wouldn't go near it. You see, I think it's going to be encouraged by speculators chasing the next hotspot. But remember how hotspots become not spots. So with few long-term growth drivers, I'd avoid the Apple Isle. It's a small market, and with people chasing it, it's going to push up prices. But it did that in the regional towns and the mining towns a while ago that didn't have the underlying multiple fundamentals. Canberra is likely to continue its ongoing steady performance, could well end up 4, maybe even up to 7% higher values at the end of the year, but excessive land tax, in my mind, is a strong disincentive for property investors in Australia's capital. I think Adelaide's going to underperform again, with maybe minimal growth, up to 4% in some areas and none in others. The Perth property market in 2018 is probably going to be near its bottom, but I don't see strong capital growth there for a number of years, not until the 2020s, so it's much too early to call a counter-cyclical investment play there. So I think prices will remain much the same in Perth. And Darwin, with very few long-term growth drivers, means that there's nothing to push property values up, but they may stop falling in this year. Looking forward, I think apartments are less likely to perform as well as houses and will continue to be influenced by the significant levels of oversupply coming onto the market, particularly close to the CBD. So be wary of that. Now, that's different to the older, what I call flats, the apartments built in the 50s, 60s, 70s in the established blocks in good locations. But again, I'd rather own a property like that than a house in the outer suburbs. Be careful what you buy, because another trend I see in 2018 is what I call a flight to quality. During the last few years, fear of missing out led new investors, inexperienced investors and home buyers to purchase almost anything their budget would allow them to get, and they were fortunate that a rising tide lifted all ships, and they did okay. But as the market is now slowing this year, I think we're going to see what I call a flight to quality, where well-located A-class properties and investment-grade properties are still going to sell well, but secondary properties, B and C-class properties, are not. And we've already seen that trend occurring with lower auction clearance rates and much longer selling times for secondary properties. And the last trend I'd like to discuss with you today is that more property investors are going to sit on the sidelines. With market forecasting more subdued growth, I think many investors are going to be questioning whether property is still a good investment, still a smart investment. On the other hand, strategic investors, those who've got a long-term outlook, they're going to see this period of slower growth as a great buying opportunity. I know I am. Sure, investors won't see their double-digit growth in the short term, but the slower markets are going to give smart investors an opportunity to buy the type of property that, I don't know, a year or two ago they would have had to compete really strongly for when there were more buyers and fewer sellers. And that's going to be the type of property that they're going to look back at in 10 years or so and say, boy, I bought that property cheaply. So this is the year to take action, but take considered action. You can't just buy any property and hope the property market is going to do the hard lifting, the heavy lifting for you. I guess it's a good year to buy properties to add value yourself through renovations and development. And as the year goes on, each week in my podcast, we're going to keep giving you more tips to help make 2018 a great year in property for you. Well, there you have it. 8 trends for property in 2018 and some information about the law of accumulation. But if you want to understand more about what's happening to property this year, why not catch up with me for a full day and come as my guest? Now, everyone else is paying $99, but as a subscriber to my podcast, if you use the coupon code podcast, you and a friend can come as a guest. Go to propertymarketupdate.com.au, get all the details and join me in Melbourne, Sydney, Brisbane and Perth in March or April this year. Now, again, thank you so much for all those people who've left the great reviews. We're getting only 5-star reviews, and that's really, really nice. And Lions Too Good For You left a message saying, "Thanks, Michael. I've learned so much. The most informative podcast for sure." Well, gee, thank you for those kind words. And Molly Simic left a message saying, "Fantastic podcast. I love Michael's mindset moments." Well, thank you, Molly. And I've already started changing the way I think. The information is so easy to comprehend for a beginner looking to get involved in property investment. Keep up the great content. I definitely will, Molly, because messages like yours inspires me. So if you've enjoyed the show, go to Michael Yardney podcast/review and leave us a review on iTunes. And it'd really be good if you could send this information about this show through Facebook, through Twitter, or just the emails that you get from me. Send them to a friend and pass on the message so I can get my message to more people. And I look forward to being in your ears this time next week.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from listening to this podcast, please leave us a review and we'll read it out on a future show. Just go to michaelyardneypodcast.com/review and it will take you over to iTunes where you can enter a review and let us know what you think. We'd really appreciate it. If you don't already subscribe on iTunes or on your Android phone, you'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes or a transcript of the show, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 20 minutes.